Cool. Today we'll be starting with another PowerPoint like last night if you were here. These reviews will be more concise to the point, right? So I'll be making these PDFs that will keep the review itself on track, as well as if you guys want to review the PDF, I will send them in the chat after we go over it. So I'll go through what I have to cover in the PDF, and then we will look at some charts going forward. If you guys have any questions while I'm talking, just type them out in chat, and then after I'm done going through the PDF, just so I can stay focused with what I want to go over, I'll go back, scroll through, and see what you guys have to ask. Okay, so that said, let's get started. Okay, so we're going to kind of walk through the day with some of the setups. So we'll start, obviously, at New York Open. So I mentioned last night, this morning on live as well, that the New Day opening gap was kind of my main measuring tool for today, right, in terms of directional bias. So we open 9:30 here, sweep this buy side, and we fail to get to the high of the New Day opening gap. We displace away. That's the first signature from the algorithm that we are weak, right? We can't even reach the high of the New Day opening gap. So this was the Judas swing, and then we displace away from it, right? And this, see this green candle? This is NASDAQ as well, but this is one tick off from the New Day opening gap, CE. So it got just short of the CE, another algorithmic signature, signifying that we're going to go lower, right? So you could have taken this silver bullet. I guess it's not a silver bullet because ICT teaches that it's a time-based model, so it would have to be between 10 a.m. and 11 a.m. But this 2022 model, I should say, to be specific, but it wasn't in the time window, right? Obviously, hindsight, it still worked. We came back up to the New Day opening gap low one more time, and then displaced lower. So this brown box in the middle is a 15-minute inversion. So here, we were watching to see if it offered support. Once we displace through, we want to see it offer what? Resistance. So we want it to become an inversion, okay? Now, we'll talk about this on the next slide, but we spoke about it in class yesterday as well. Some of the stuff regarding the open, high, low close of the 4-hour candle that begins at 10 a.m. and closes at 2 p.m. So 10 a.m. is right around here, right? So regardless, if we do think we're going to go lower to reach for more sell side objectives, right? Price has been heavy on the higher time frames, reaching for sell side liquidity and discount and efficiencies. So if we do think that we're going to go lower, we don't want to short down here at 10 a.m. at low of day. This is exactly what we talked about yesterday. Yes, we sold down a little more, but we're waiting for something like this. We're waiting for price to get back up into what? A premium from this high to this high, right? And our 15-minute inversion. Once we get to a premium into our array that we're monitoring, we want to monitor, does it show respect or disrespect? Now here you can see, do the bodies respect the 15-minute inversion? And again, it's just the brown box. Yes, the bodies are failing to go above, right? Once I see this inversion fail, I'm like, okay, this was just a move back to premium, and we have further sell side to reach for. We have this sell side liquidity, and then we have some higher time frame objectives to the downside that are not pictured on this chart, but we'll talk about in a few, right? So once we reach these levels, 15-minute, this could have been an hourly inversion, a 4-hour inversion, whatever. You're just waiting to see this type of reaction. The bodies are failing to get above. It's above equilibrium of the intraday price run, right? So a premium. And then this inversion fails, and we also create this fair value gap 2022 model, right? And then we attack sell side. So these are the type of moves that I love. Price reaching, so for short, price reaching a premium, respecting a higher time frame level, and then a failed BISI becomes an inversion, displacement away, right? And then this is the signature we want to see as well. This red box is the SIBI. The white faint line is the CE of it. The high of this green candle does not reach the CE. As I always say, what's that indicating? Weakness. We have places to get to, okay? So I hope that first example makes sense. Some good action there. But another good example of why we don't short at low of day at 10 a.m., right? Because price is going to want to reach back up to a premium, not only to offer smart money to enter short positions, but to trap anyone that thinks we're going to go long, okay? So again, this is that 4-hour open, high, low, close pictured on a 5-minute chart. So we open here, right? We're expecting some sort of manipulation to the upside to create the high of the wick, because 99% of the candles that you see on higher time frames have wicks, right? Even if this was a bullish candle, right? If our bias was bullish, we would still want to see a wick down that serves as the manipulation phase before expansion upwards. In this case, we want to see a wick up before the expansion downwards. So you guys see how this comes together? At 10 a.m., we expect some sort of retracement to premium, right? This order block is not charted, but it's what we were watching on live. If you guys recall, the bodies respected it beautifully. And then we got that setup that we just had here, right? In this 15-minute inversion. So some beautiful action, pretty similar to what we talked about yesterday on that large expansion down day, right? Just wait for price to get up to a premium of a price leg and see if we get our setup. See if we get our 2022 model or inversion or whatever you feel comfortable entering on. But the main thing is that we expect this manipulation at 10 a.m. to a premium. We don't want to shorten a discount, okay? So another good example of that. Now this was later on the day at lunch. Another good example of, I forget who asked yesterday, but I also made the graphic of how to treat large expansion down days. And again, if you want that, it is in my content, I believe. Yeah, it's in the my content channel under education category. And that, what I posted in there is literally this setup to the T. So we have this price leg high, price leg low. Why am I annotating that? Because this is doing two things: sweeping buy side, that's traps longs, and reaching to a premium between this high and this low. Okay, so it's above 50% of this low to this high, sweeps the buy side, and then we're simply just seeing if we get a setup, right? If we're chopping around and price action is gross, we don't need to force a setup, but this is the setup. We have a BISI here right away. Instead of longing here at this, because we understand narrative, we understand we just came to a premium and took buy side when higher time frame direction is bearish, we'd rather just, this could have supported price and pushed us higher. But best case, we wait for this to fail and then we can enter on the inversion. Again, this red box, we have a SIBI and then the algorithmic signature that I love. Hopefully you guys are starting to see more often when you're reading price on your own or reviewing on your own. This high fails to get to the CE of this inversion. That's an algorithmic signature, right? We wick up into it, displace away, okay? So we were so low in discount from an intraday basis, but this price leg, this is how you can use fractal price legs when we're heavy. This high to this low, short-term premium. If we're heavy, we should push lower. And again, this was the low of day, right, when this setup was forming. So you can take a partial here, or if you're not comfortable with holding, you can take your full position off there or trail your stop super tight. Again, as always, risk preference is all up to you, but we have more sell side objectives to get to. So this is a weekly volume imbalance. This is the high of it. This is the low of it. So price is not balanced there. So we should expect price to go down there to balance it, okay? Another way you could manage this trade is you can mark up the 50% or the quadrants of this, and every time it hits 25% of the weekly volume imbalance, you could trail stop. If you get the continuation, you can do the same at the 50%. You could trail it more, 75%, and so on. It's just whatever you're comfortable with, right? Or you can look at the last PDRA and then put your stop loss above 50% or something, okay? But do you guys all get, at this point, this model, right? Because now I have the benefit, I have the advantage of, okay, if it rips up through the inversion, I know I'm wrong right away. And look how small risk is here, right? Say there was a fair value gap, and I think you guys can see my cursor going around, but say there was a fair value gap, a SIBI, like a large SIBI here, right? Instead of blindly entering that short and having your stop be above, all the way above this price like high, this helps me reduce my risk substantially and saves me mental capacity because I don't have to be stressing. I know if I'm right or wrong usually pretty quickly. Okay? And again, another benefit is that we shouldn't close above it regardless because we have buy side delivery, sell side delivery, and then we have it return here. So that's why we shouldn't expect it to even go to the inversion CE best case scenario. So I hope that makes sense to you guys. It's not only helped me with risk, but allowed me to read price so much clearer because it helps me see the order flow, the algorithm in action. I used to long these all the time and I would get wrecked, right? But now that I have a higher understanding of order flow, these are the type of setups I look for, okay? And this is the PM session long, which I was not at the charts for. I was elsewhere doing other things. But great setup here. It can be scary on large downrange weeks or days like today and yesterday to long. And of course, when we're heavy, you want to just, like, you don't have to trade this move. Don't feel like you missed out because you saw other people catch this long, right? The direction was clearly bearish today. So if you're just waiting for shorts, you have to be okay with missing these long moves, right? These short-term retracements. But this here, if you look where my cursor is on the bottom right, LV is liquidity void. And after we finish this review, I will pull up the actual charts. I mentioned it last night. And I believe this morning in the live stream, the liquidity voids on the daily charts of both ES and NASDAQ that I wanted to watch for. Okay. And this is the reason why, right? We come down. This low of day is made right at 130. And you can't really see it with this box here, but this box is important for me to note and to teach you guys. But we sweep these lows at 130. And what are we going into one last time? The higher time frame level, the daily liquidity void, right? And there's one more piece of the puzzle, which is on the next slide, that gives you more confidence that a short-term rally is reasonable to expect, okay? So you can enter on this fair value gap, right? I personally would not. Why would I not enter on this fair value gap? One, we're in this SIBI. Two, we're so heavy. We've been heavy today, yesterday, the past couple of weeks, right? So I need more conviction when I'm trading against the trend, okay? I can still take longs like this. You can still get good setups, which we have here, and catch these moves, right? But for me personally, it takes more conviction. And we could have just easily retraced here and went lower. But I would have waited for us to get above this structure here, right? See how we have all this chop here? So not only do we have this lower low here, so this highest up close candle is a breaker. I would have entered on that and I would have put my stop loss below the breaker. And I'm not using that stop loss just because it's a breaker. My thought process is that this red square here is and should be a balanced price range. So if it's a balanced price range and I'm correct about that analysis, price shouldn't have a reason to go back down in this box. So if I'm right, price shouldn't have a reason by that extension to go back to this fair value gap. You guys see how you can start to see when to expect breakaway gaps? we also have this inversion. We've already had sell side delivery. We've already chopped around here. We've already delivered to this inefficiency. So this is a great way, understanding up and down movement and then expansion above this structure. It's already had buy side delivery, then sell side, then buy side off of a higher time frame level, and we've swept sell side liquidity. So we can expect this to become a breakaway gap and not fill in completely, but I would not enter on this. You can. My personal preference, I would require more because we're trading against the higher time frame trend. I would require to get above this structure. Okay? Does that make sense, guys? How we can predict breakaway gaps using balanced price ranges. And if it doesn't make sense and you have a question, feel free to ask. But I would have, again, waited to see if this was going to hold or if this was going to fail, become an inversion, and push us lower. But once we pushed above this structure, right, I'm bullish to what? Any random high? No, a session high, the previous session high. What's the previous session? Lunch. This is at like 12:03 or something, right? So nice move there. And again, you can see this is our weekly volume imbalance high. We reclaim it, bodies respect it, and push us up. All right. We also have, which I didn't even see, this would have been a good trade as well. If you didn't feel comfortable trading off this breaker, there's this little inversion here. Beautiful there, tapped into. I believe it came back down into it right here as well and pushed us higher. Right, so if you didn't want to do it on the breaker, you could still require the inversion setup to form and then trade it. Okay, so see the multitude of ways that we can enter, the multitude of ways that we can internalize order flow. Okay. And again, if some of the stuff doesn't make sense or you want me to repeat stuff, don't be shy. And then lastly, what kind of freed up the possibility for a short-term rally in indices and ES and NASDAQ was that dollar finally swept these equal highs that we were watching, right? So once we see this displacement away, we can assume that dollar is probably going to reach for at least this low, this internal range of liquidity, and possibly for overzealous, this low as well. So this is how you can use dollar to aid you in your analysis with indices, right? And funny enough, I think I mentioned this like as a, not this specific like setup with them sweeping these highs, but if I was trying to long and I was waiting for a long all day, right, I would be waiting, right? We tapped it here. We didn't purge that high. We came down and then we purged the high. Okay, so I wouldn't have wanted to long until Dixie got these equal highs, right? So if you're waiting for some sort of reversal on a large downrange day like today, this is how I would use dollar. I would say, okay, no longs until these clear equal highs are swept on dollar. Does that make sense? Lady, she's starting to get it. Nice, nice. Okay. And then lastly, Quan asked me this last night about any advice I have for directional bias and such. I touched on it this morning as well. But I think this is important to go over because you guys that are here and some people that are going to be watching this on YouTube as a review later, it's good to kind of internalize. Or if you're reading it in the PDF that I'll share with you guys after that we're reviewing right now. But higher time frame, directional bias, ICT always says it's the most important thing, right? Weekly order flow, daily order flow, even 4 hour, right? And it can seem, if you're new, kind of intimidating trying to learn. You know, it seems like there's a gold mine. Like, oh, if I see this, I'm definitely doing this on the higher time frame. Or bias seems like this big bad wolf in the woods, right? That you should be scared of. But I'll reread this message I sent him. But I thought it's good for people who are struggling with the higher time frame bias. I said, this is just a daily chart. It doesn't matter if it is a 30-second or weekly chart in order to read price. but directional bias means that weekly or daily time frame trumps, in other words, takes priority over the lower time frames. So trust what you see on the weekly or daily charts for directional bias. If price has not reached that sell side objective, so this low, and it's retracing upwards, what should we expect it to do before going lower? Reach to a PD array in a premium of the most recent price leg. So look on the right here. We didn't get to this low yet. From this swing high to this swing low, this is discount, this is premium, so equilibrium is right in the middle. And what's right above it? A daily fair value gap, right? So once we get up here and we displace away, your directional bias is sell side, right? It's bearish. This could be a 30-second chart and you would still internalize it the exact same way. You're reading price the exact same way no matter what time frame it is, but the only difference is that you use weekly and daily, all these higher time frames to gauge your direction, right? So you're not reading price any differently. Does that make sense? I thought that would be beneficial to put in here too. But think about everyone who doesn't understand these concepts, right? When they get up to this level, they think we're going for these highs. All we're doing is, and again, if this was the 30-second chart, this would be what, like 4 minutes or something, this retracement. But it's the same thing on a daily chart. So it just takes a little more time, right? If this was a 30-second chart at this low, would you want to short to down here? No, you'd want to wait for a premium. If it takes the low without you, snooze, you lose. If it retraces and offers you the setup, you can get in and go take that sell side objective, right? So you're reading price the exact same way on every time frame. But the weekly and daily give you that quote unquote directional bias, okay? The narrative. And then we refine it from the weekly to the daily, all the way down to the 1 minute or whatever you execute on to base our actual trades at the proper time. Does that make sense? Yeah, Blink said smart money reaccumulating more positions in premium. Yeah, so we came back up here. The algorithm allowed smart money to enter in a premium, right? They don't want to sell all the way down here. They want to sell up here. So I hope that review was good. Some great examples today, some great examples yesterday. But let's go and see some price. Let's look forward and look at some real charts. And then I'll answer some of your questions. And CNJ, I didn't forget your question. Let me just go through the charts and then we'll look at, I believe it was an hourly order block or something. I'll just go look at the message you sent in the main chat. So give me 1 second.